What is good, all my trader homies out there? It's your boy Kevin from Touchdown Trades, your trading BFF, your stock market bestie. Today we're going to be talking about swing trading, and I'm going to show you guys 3 of my proven strategies that can help you to easily make $100 per day swing trading the stock market. These strategies work even if you have a small account. Swing trading is by far the best way for new traders and investors to become profitable in the stock market. New traders are attracted to all the bells and whistles and speed of day trading, but swing trading, in my opinion, is a more optimal and consistent form of trading. And even after a decade of my personal trading, transforming my style and strategies, swing trading is still my most profitable form of trading. More profitable than day trading and more profitable than long-term investing. My definition of swing trading is taking a position in a stock with the intention of holding that position for more than one day. So from like 2 days to anywhere to 2 or 3 or even 4 months. If you're buying a stock and selling it the same day, that's day trading. If you're buying a stock with the intention of holding it for years and years, that's investing. Swing trading's in the middle and what I believe to be the best form of trading. The longer hold time allows us to capture more of the move and in return capture more profits. And that's what this is all about, making profit. Stay tuned and I'm going to show you guys my 3 swing trading strategies that you can add to your trading arsenal that will allow you to make $100 per day swing trading the stock market. Let's roll. All right, trader homies. So let's jump right into this, not waste any time. The first strategy that I like to use is called the alert strategy. I made that name up, but basically what I do is I have my scanner over here, which is just showing me the top gainers every single day. So when I see a gainer that I like, for example, this LMPX from Friday, then I go add it to my watch list. I called it my swing trading watch list. So basically, I put it there, and what I'll do is I'll go into the chart and I'll break down the chart. For example, we have an obvious gap fill at this area right here. So that's going to be a key area. And since we closed over that area on Friday, if we pull back into that area, that would be a good place for me to initiate a swing trade on this LMPX. So what I'll do is then I'll go into a faster time frame and I'll set an alert, okay? So if we open up below this level on Monday, I'll create an alert and I'll say at or below. So if we open at or below that level on Monday, or on Tuesday it comes back down and goes through, breaks down below that level, that alert will trigger. It'll trigger to my phone and I'll know that LMPX is just about to hit my level that I want to buy the stock at. So before I do that, I will set out my trading plan. On this LMPX, I want to buy it around $16.30. So then I'll look to see where my stop loss would be, and I'll put the stop loss there at $14.20, and I'm going to edit that, and I'm going to edit that line, that trend line, and I'm going to change it to red. That way I know that's where my stop's going to be, and I already have the plan in place. And I'll also plan out where I'm looking to take profit, and it's pretty obvious to me that it would be in this area right here, because that's where the next gap area is, and we know that gaps are important areas of support and resistance because gaps tend to fill. Gaps in charts tend to fill. It's just the way it is. So I'll add another drawing there and I'll make that green. I'll make this line green so I know that's where my first profit target is. If in the next 2 weeks or so, this alert goes off that I've already set on my Thinkorswim chart, you don't have to use Thinkorswim. You can use any platform they typically have an alert feature where you can set price alerts, and then this will allow you to use this same strategy. If this alert goes off and I pull up the chart real quick, I'll probably have 20 of these that I'm watching, trades already planned out that I'm watching for this stock to go back, pull back down to my buy zone. Once the alert goes off, I already have a plan in place. So I'm ready to go. I'm ready to strike on this stock. So you don't really need a scanner for this. The market is scanning for you. You're looking at stocks that are strong, that have been making moves up over the past few days and or weeks or months or however long, and you're just watching it, stalking it like a tiger through the jungle, waiting for the prey to make a mistake. We're waiting for the stock to make a mistake, pull back into the area that we want to buy at, and then we buy. We already have a plan in place and we're good to go. I'll show one more example of this strategy. So this SHLL, Tortoise Acquisition, Helion, has been making a big move. You're probably familiar with it. If you're familiar with EV stocks, you've been familiar with this Helion. Well, I wanted to buy this. I wanted to swing trade it, but I was watching it. It was making new all-time highs, and we never want to buy stocks as they're making all-time highs. We want to buy pullbacks. You always want to buy pullbacks into support when you're swing trading. It allows you to get in at a better price. It allows you to set a defined risk, meaning if the trade goes against you, you know where you want to know where you're going to stop out, where you're going to get out, where you're going to cut your losses. We don't want to lose, but it happens to the best. Everybody's going to take losses sometimes, and you have to have a plan in place or you're never going to make it in this industry. For this SHLL, I was watching it way up here, and I set a price alert because I wanted to get in at like $40. So I set a price alert at like $42 or so, and that alert went off. I checked my phone, and I already had a plan in place. My stop was going to be down here at like 35. I was looking for my first profit target up over 50. Okay, so I already knew what I was going to do, and I bought in at my desired price, and I got a great entry, and I'm pretty confident in this trade. This strategy is great because you don't have to scan the markets looking for your swing trades. There's nothing wrong with scanning looking for swing trades, but it's just easier to go with the flow of the market. So every day you're watching the markets anyways, probably. So if you see a stock you like but it's too extended, plot out a trade that you'd like to take on it. Put a price alert at the price you want to buy. Plot out the support and resistance levels and plan the trade out and get ready. Because when that stock starts pulling back, you don't want to be a deer in the headlights. You want to be ready to roll and be ready to fire when it hits your desired price point. All right, guys, so the second swing trading strategy that I want to discuss is what I call my RSI Indicator Strategy. The RSI Indicator is a relative strength index. It can show you when a stock is overbought or too extended, or a stock is oversold or too cheap. It's not foolproof, and you shouldn't rely on it by itself, but it can allow you to pinpoint good entries and exits in your swing trades, and I'm going to show you how I use the RSI indicator to make my swing trades more accurate. All right, so I use a free tool to do this called FinViz. It's a stock scanning tool. It allows me to use the RSI indicator to find stocks that I think are trading at a discounted price and are ready to be bought up. So the first setting that I plug in is performance, and I like to put up 10% on the quarter. The second one I put in is RSI, and I like to put in oversold 30. You could put in oversold 10 or oversold 40. It doesn't really matter. You just want to make sure that you're plugging in oversold. So what this is allowing us to look for is stocks that are kind of strong, stocks that are still in an uptrend because they're up on the quarter. They're still up on the quarter, but they've started to sell off based on the RSI. And we can buy these stocks at a discount on the dip off of a support level and then look for the move back up. So let's take a look at the results we got here. We can't just buy in to any of these stocks and expect it to work. We still have to use the basic swing trading principles, such as buying off support and selling into strength, but it does allow us to improve our accuracy. Right off the jump, I like this Grubhub. This GRUB is the ticker. So let's go back to the charts and look at this and plot out a trade. Already plotted out the support and resistance lines. We can see that we have a support area right around $59.30 that's been interacted with several times, making it a valid trend line. We have another area up here towards 65 that's been interacted with several times as well, making it valid. And then we have another pivot right here, kind of a gap, little gap in the daily chart, that making it another valid area. So what I would do with this chart is I would look for this 65 area to be my first buying zone. I would take my starter position, maybe half of my desired position size right there towards 65 on any more pullbacks. And then I would set this area down here at the 60 level as my stop loss, and I would buy. If it broke through the 65, I would add again to get to my full position size, which is allowing us to cost average basis down, get a better average price towards our stop loss. And then we're looking for this $60 area to hold, and we're looking for this thing to move back up towards this next pivot here, up towards $76 a share. I would sell half my position right there towards 76, and then I would hold the rest, looking for this prior high to break and sell at those highs. This strategy allows us to have great risk to reward ratio, low risk trades with high upside. Let's look at this grub trade, for example. We're risking, say we get an average price of $63, our stop loss is 60, we're only risking $3. Our first profit target is up here at 76. We have a $13 profit potential, a $3 risk. So our risk to reward ratio is more than 4x. That is just great risk to reward, and it allows even traders with small accounts to make nice trades and build their accounts steadily over time without risking too much of their account value. Let's look at one more of these RSI trades, and then we'll move on to my third strategy, my third swing trading strategy. So let's look at this GNMK real quick. I like the looks of that. We'll plot it out and see if there is a swing trade there. We have an area of a heavy volume right there. That can be our risk and our area that we want to buy in front of. So we start buying at the we'll say the $10.50 area. We buy half our position. This is our stop loss down here towards $8.70. So we buy half our position at, say, $10.50, another half at $9, giving us an average $9.75. And then our stop is down there at $8.80. And then we're looking for this thing to bounce back up towards that $14 gap fill. Is going to be our first profit target. So we're risking less than $2 to make about $4.50. So more than a 2-to-1 risk to reward ratio. We can see down here the RSI was really strong and it's pulled back. And now we're pulling back into support. So we expect that RSI to base out, start heading back up, along with the overall stock price. So this RSI trading strategy can improve your accuracy, can improve your win rate, and it can increase your account size steadily over time. This is one of my favorite swing trading strategies. Let's wrap it up. Let's move on to my third swing trading strategy that we're going to talk about today. The third and final strategy that we're going to talk about today is what I call the short squeeze strategy. A short squeeze is where a bunch of traders are getting short an individual stock, and if that stock starts to go up, those traders are going to get stopped out. There's going to be a buying frenzy, and the stock is going to spike. So I have a screen set up on FinViz. My first setting is performance, quarter up 30%. Second one, performance down on the month. So the stock is up big on the quarter, but it's kind of pulling back on the month, allowing us to get in at a discount and allowing us to get in at a better price. The third setting is over $5. you don't really have to use this, but I found that stocks trading over $5 usually respect this strategy a little bit better. So my next one is average volume over 1 million. We want to be trading stocks that have volume, that are liquid, because we don't want to get stuck in some illiquid stock that we can't get out of. And the final setting is this float short setting. We have it set at high, greater than 20%. So again, we're looking at stocks that are strong, that are pulling back a little bit into support, and that are heavily shorted because we want the shorts to get squeezed out, and we want there to be a squeeze to the upside while we are swing trading the stock. So let's look at the results. We got 7 results out of the entire stock market, and we can scan over these real quick and see if there's any that look good. I see this BGFV already looks good. Big 5 Sporting Goods. Car V, not really. CVNA, I like the looks of that a lot. Kodak, not really. Lake, not really liking that. SRNE, not liking that. W, I like that. I like this Wayfair a lot. So let's look at Wayfair and let's look at CVNA real quick. All right, so this Wayfair, I got the chart pulled up. It's obviously been strong. It's had a nice run because of people staying at home and shopping through the internet, shopping on online retail websites. Wayfair has made a nice run because of that, and has since pulled back pretty hard and is now coming into support areas, allowing us to buy this at a discount. On top of that, it's heavily shorted, so if it does hold the support and start to trend back up, we could get another leg up on the short squeeze. So let's plot out our short support and resistance lines and plan this swing trade. We got an obvious area right here at 230. That's where I would want to start buying. My stop would be down here at about 200 or 195 or so, and my first profit target would be way up there around 315. My plan on this would be stop out 195. I would take my first starter position, half my desired position size. Notice the trend with all of these strategies is that I'm not going in full size right away. I'm buying half at my desired point, and then if it drops lower to my stop loss, I'll add another half, getting to my full position size. That way you have a better cost average basis if it does drop on you. So let's say our average price is 205, and then we want this thing to hold this level and start heading back up, and we take profit over 300. The risk to reward ratio is outstanding. You can't beat it. That's like a 4-to-1 risk to reward ratio on that one. Let's check out that second one. Before we go over the CVNA real quick and plot out what I would do with this. If you do like a company based on its fundamentals and you're looking for a reason to buy or a place to buy a company that you like based on its fundamentals, for example, you're looking to get it into a EV stock because you think the future is bright, you can use these strategies. You can just continuously watch the stock and use these strategies to find good entries and find good exits when you want to take profit. You can use the RSI. You can check the short interest. You can use all of these strategies to find entries to stocks that you want to get long into. All right, so the CVNA, I can already tell I really like the chart. I really like the setup. You have the run up. It's highly shorted, and it's pulling back into support, allowing us an ability to get into a good stock at a discounted price, and we can look for this thing to squeeze back up, squeeze the shorts out, and we will profit heavily on it. Okay, so what I would do is I would probably start buying towards this 160 area, using this trading volume consolidation area as my stop. So my stop would probably be down like at 135, and then I'd be looking for this thing to head back towards all-time highs. So you can see how this strategy could be useful all three of them, the RSI strategy, the just watching the stocks that are running up over the last few weeks and waiting for a pullback, that strategy, and then this short squeeze strategy can all be useful in your swing trading arsenal. I hope you guys got something from the video. If you did, hit the like button for me. I'd really appreciate it. If you're not yet a subscriber, subscribe to the channel. What are you doing? I love all of you guys, and I'll catch y'all in the next video. Peace.
Drop.